Today is Wednesday, January the 15th, and this is a video talking specifically about Tesla. I have a friend who wants to buy Tesla because he thinks it's a great car. He reads a lot about how excited people are about Tesla, how it's going to go to $3,000, $4,000, $6,000 a share, and he wants to get in on it now. But the price of $518 at the close today means that to buy 100 shares, he's going to have to come up with $52,000. So we started talking about options. And so this video is to help him and other people who are curious about how to buy expensive stocks with options, just to understand a little bit more. And what he and I agreed on is that we're going to buy one contract each at some point. Wasn't today, and it probably won't be tomorrow. But at the right time, we're going to buy one contract, and then we're going to watch it every day and see how that one contract behaves relative to price movement. And we're going to look at delta, we're going to look at theta, and we're going to look at gamma. These are the three key things that influence the move of options in relation to the underlying price. So we're going to use three tools for that. We're going to use a chart, and I'm going to use Motive Wave for that in the bottom left-hand corner here. We're going to use the option chain, and I'm using Thinkorswim. And lastly, we're going to use tip ranks and see what the professionals, like them or not, they are out there, and those are the people that are influencing the headlines, like crazy things like $4,000, $6,000. So let's just see how many analysts are out there that think that. Well, Philip Houchois from Jefferies, who's a pretty damn good 4.5-star analyst, his target is $600. And he reiterated that yesterday. And we can take a look at what Philip has thought about Tesla in the past. And he's been a sell, then a hold, but he's been a buy for Tesla since December of last year. And he wasn't right until June, but he kept his buying up, and he's been really right since then. Overall, he has a 60% success rate with a 26% return measured against no benchmark, but we always want to measure it against the S&P 500 because that's the only thing that counts. So he's up 21% more than the S&P 500 in 1 year with all of his picks. So, but over 2 years, he's up 24%. This is an analyst, almost a 5-star analyst, the 209th out of about 6,000 analysts. So there's somebody you can trust, and he thinks that it's going to 600. Now we probably have to read some of his stuff and see why he says that. And here's The Street. There's an article on The Street. I don't know if we might have to subscribe to read it. Yeah, it's right there. So read it. I don't want to spend time in this video here, but read it, see what he has to say. Let's go back and see Colin Rusch from Oppenheimer, who's a full 5-star analyst. He's got a $612 target on it. So maybe buying 600 calls is not a bad idea. Overall, what TipRanks is telling us is that of the 26 analysts offering 12-month price targets for Tesla in the last 3 months, the average target is $360. But you don't want to look at analysts that are 1-star, 2-star, and 3-star. I don't want to hear what they have to say. They're not very good. So the high is 612. The average is 360. Somebody even has a $44 target on there. That's why you don't want to look at the $1 and $2 type of, 1-star and 2-star type of analysts. There are 21,000 people on TipRanks who are following Tesla analyst results. That means that they are getting emails every time somebody comes out with an analysis on Tesla. Let's look at some of the other factors. Let's look at insiders. This tells you what insiders are doing. Not a lot of information from insiders. They seem to be mainly selling, but based on 3 informative insider transactions, it's negative. I wouldn't put a lot of weight in that. But hedge funds have decreased their holdings by 220,000 shares last quarter, based on 6 hedge funds in the most recent quarter. That's quite negative. Now, these are the hedge fund managers. Ken Fisher sold out completely of Tesla. And we all know Ken Fisher. Now, here's a 4-star hedge fund manager. He added 1%. And here's a 3.5-star manager. He's new in the position with $1.64 million of stock, but it's a minute portion of his portfolio. So we don't know a lot about the hedge funds. This is going to show you the earnings, but the Tesla Smart Score, the Smart Score from TipRanks, let's click on that. TipRanks Smart Score analyzes stocks based on 8 factors extracted from our unique data sets. And here are those factors. And based on all of that, if you have the subscription to TipRanks, explore this a little bit further. But based on that, TipRanks is saying that this stock is going to underperform in the next 12 months. I'm going to download this PDF, which gives me more information, and I'm going to share that with my friend, but I'm going to read it as well. So now let's look at our other tool, which is the chart. And let's look at it just basic here with no overlays. And we can see we've had this tremendous run up after a 2019 drop in the first 6 months where we bottomed out at $178. We've made a pretty steady run up. Now I got to go back and look at their news releases, and I would use Google for that. They have a very good point and click where you can click on a date and see a down candle and see the news releases at that time. That's another tool we could add to our tool chest there. But when we look at this downwards move and we look at it on a Fibonacci basis, and how likely are we to go back and meet crucial targets to recover from this loss? Well, we can see that 38.2% looks like a pretty valid number. Look, when we came up to 38.2%, we pulled back. We came up to it again, we pulled back. We came up to it again, and we hesitated, and we chopped around for about a week and a half. So that's a valid Fibonacci number. 68.1 looks like a valid number with the number of times, number of days the stock hung around there, as does 78.2. Now we blew right past the 100%, and if we look at the volume when we were blowing past the 100% right here, look at all this institutional buying here. This is big volume beyond the 20-day moving average, and it continued to be pretty darn good volume. And here, even though the stock was going up to the 138.2, and it spent almost no time there, just 2 days, blew past it to 161.8, blew past that, and now seems to get hung up for 2 days at 178.2. So this is a reliable Fibonacci. Where would the 200% be? So let's just double click on this and let's add the 200 to this. Can't type. 200%. So our ultimate target for this stock is going to be 579, 580, pretty close to the $600 target that they're talking about, in TipRanks for those 2 most recent analyst calls. So let's wait for a few more analyst calls before we jump in. Plus, the type of volume that we saw yesterday, this was institutions like hedge funds, like pension funds, like mutual funds, corporate holders that are selling. And today's volume was fairly low. So let's look at volume. Let's wait until we've got the end of a pullback, and let's look at our stochastic momentum indicators, which really since the end of the year have been signaling that the stock is overbought. This red line here, when both your short-term blue and the longer-term red are over the red line, over the overbought, it's just too many people buying, and too many people buying too fast. That's what causes the drop to happen so quickly, or the rise to happen so quickly as well. It's just a lot of people buying in a short period of time. But the SMIs are going down. The moving averages are still moving up. Let's keep an eye on the stochastic momentum indicators. It's certainly overbought, and we'd like to see it come back to a point where there's more willingness to buy into the stock. We don't want to be the ones who buy into the stock when the indicators are saying that the stock is overbought, that there's too many people who have gotten in and ridden this really tremendous wave up. Since October, people who bought at 250 have more than doubled their money. And that's a good reason to get out. Anytime you've doubled your money, it's a good reason to get out. Let's wait until all of those people have gotten out and we've got clearly support at 178.2. Then we know we're heading up to 200%. We're going to add other Fibonacci's as the days go on to see when we should step in. Now, the third thing we're going to look at is we're going to look at the options chain. And we're going to decide whether we want to buy calls, sell puts, or buy a call vertical. So offset some of our costs by buying one call and selling another. So we create a vertical spread. And in subsequent videos, we're going to talk about vertical spreads. We're going to talk about the impact of buying a call or selling a put. So tomorrow's video, after we look at the stochastic momentum, we look at the volume, we look to see if there's any more analyst reports, and we look at the chart. We'll go back, and tomorrow we'll talk about the advantages of buying a call or selling a put and the risks of buying a call or selling a put before we step into one or the other, and we buy one contract and we learn from that one contract on a day-by-day basis.